Hey guys, Boris Lasser from BK Forex. Welcome to our weekly technicals for the week of 4/21 through 26 of 2013. The question in front of next week, I think, is going to be: Can Euro hold 130? As always, trading foreign exchange on margin carries a high level of risk when every suitable for investors. So I invite you to read this disclaimer very carefully, either by stopping the video and going backwards, or just simply looking at it right now. Now, taking a look at the week's trade, we're going to start with the euro because even though the yen was a big mover, I think the euro is kind of an interesting look into next week. This is a very, very short-term chart. It's a 30-minute chart, so I'm going to scale out. But what you can see basically on the 30-minute chart is that we're making these spikes out to the 31s, but the 30 level continues to attract. And if you look at the 4-hour charts, you can see this much better. Now, the original test of the 30 was very, very quick and produced a classic value proposition area where basically where price doesn't spend a lot of time in the area, it usually means that you have a counter trend reaction. Basically, there was a lot of buyers who felt this was a good scoop, and as they scooped up the price, we obviously had to move higher. But the move higher was minuscule. I mean, it kind of petered out at this 31, and in fact today it was a big flame out. The push and pull in the euro right now is whether they're going to lower the rates at the next meeting in May or not. There seems to be a lot of contradictory rhetoric coming out of Wiedemann, who is the head of Bundesbank. It feels as though actually the ECB should lowering rates, and in fact I think lowering rates would be perhaps a knee-jerk reaction negative to the euro, but ultimately much more positive for the eurozone as a whole. But the question whether they're going to be able to do this in May remains open. I think that's one of the key things that's kind of been keeping the euro on a defensive this week. What's been keeping it up has been all of these flows on the carry trade basis. That is the euro-yen flows. There's been talk about the fact that Japanese are starting to buy European bonds, especially periphery bonds like Italy and Spain, which yield a much higher yield than the Japanese rates do, and therefore provide investors in Japan with much better rate of return. So capital inflows on the one hand has been propping euro up. Fear of a potential interest rate spike have been keeping it down. But honestly, it's just been if you pull back, it's been essentially a consolidation move for quite a long time. So we had this big breakout, 32 topped out, and now we're kind of consolidating. But I think this 32-30 range becomes relatively critical now, because if we come back and dip below into the 30s, it becomes essentially a topping formation, and the euro sort of shows its hand as a weakening currency with a potential retest on a longer term basis all the way out to the 28s, 2750s. So, excuse me, unless you have a move through the 32s, the bias in the euro remains to the downside. And if we break the 130s, I think this time there's potential here, obviously, to test lower. Although, given the way that the euro has traded, it feels like even if you have a test at the 30s, it's going to be a stutter step process. In other words, test at the 30s, bounce off the 2950s, perhaps a rally back to 3050. I don't see a straight line down unless we have some massively negative news out of the eurozone that perhaps creates a panic of outflows. It's a grinding, slow market as we enter into the summer, which is very, very typical. And the warmer the weather gets, the more muddy the price action is likely going to be, as you're going to get less and less liquidity, less and less development, and less and less activity in the marketplace. So euro, for the near term, the key level to watch is going to be the 130 to the downside. The key level to the upside, which will obviously surprise a lot of the shorts and will trap a lot of shorts, is going to be the 32s. If that breaks to the upside, I think that will create potential impetus all the way out to the 33s, maybe even 3350s, because that would really trap a lot of the shorts. Now the yen has recovered quite a lot off of a rhetoric from Aso and Kuroda that basically the G20 does not really care about the Japanese monetary policy. That their statement does not pertain to BOJ. Therefore, all systems go. We're gonna QE till kingdom comes. QE infinity is BOJ's new motto. So what you see here is kind of a very interesting spike formation. Rarely do you get these kind of V formations in currencies because you usually get a sell-off and consolidation and a retrace. Here we have a clear V formation with obviously 95 level being a very, 96 level being a very, very quick value proposition for buyers. But we're now coming up against the very, very critical 100th century mark. And we're now in this 95 to 100 corridor, this corridor of approach, as I call it, where we've now failed 3 times, 1, 2, 3 over here. So a bust through the hundreds should really push the sellers into a pretty serious short squeeze and probably take us all the way to 101, 101.50. There's 2 ways, obviously, to want to try and trade this. Either you anticipate the move and kind of try to trade into the 100 sweep, or you wait till it breaks the 100 and then join the potential move higher on a momentum basis. Either way, the bias clearly has turned up. For now, 99 is the near-term support level, and as long as that level holds, all systems appear to be going to the upside, as yen has clearly shown that the longs are beginning to win. Dollar yen is showing that longs are beginning to win. Now, as always, trading currencies on margin is a risky proposition, and I invite you to read this disclaimer as always. And if you need to rewind the chart, please do so, because it's very important to understand all the risks and the fact that trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. Okay, so back to the currency charts. The yen and the dollar and the euro dollar seem relatively clear in the sense that we have this run to the 100, we have a potential test downside to the 30s. Cable less so, although as Friday comes to a close, we're really showing a very, very negative pattern. This is coming off of the fact that UK got downgraded by Fitch today, which I think surprised everybody and pushed us really straight down. The big level in cable here is this. This is the 5250s. This needs this, excuse me, the 5200s. If this support holds, it may begin to stabilize, and we could have another anemic rally back up into the 5250s, 53s. A break of the 52s, sort of like I would say a break of 50 to 5180s, really opens up a full distribution all the way down to 5100, and would really accelerate this whole downward draft in cable, and completely kind of negate this rally that we've had for the last month and a half, this rebuild rally. The rebuild rally failed at the 54. We were thinking that it was going to go to 55, which was the recovery mode. It failed at 54. It clearly has failed now. We've had a series of lower highs, and dominant bias in cable now is going to be sell the rallies. Until and unless the 54 breaks to the upside, cable is really in a sell the rallies mode. Or sell the breaks to the downside mode if you're trading on a momentum basis. It's a pretty clear chart, I think, as far as that goes. Although when it comes to cable, there's also absolutely nothing clear about anything in that currency, and it can turn on a dime. So you have to be very careful with the volatility. But generally, if you're a longer-term trader, I really think any movements in this area are going to be weak, and unless the 54 gets broken to the upside, every rally is a sell in cable. Aussie also having a weak close after trying to rebuild above the 103.50. 103.50, which we've been talking about for a while, was a great level of support, which is now becoming a great level of resistance. And I think that's very, very critical. And Aussie now is setting itself up, if you have more risk aversion flows into next week, as a potential break of the 102.50. Not even the 102.50s. I think the break of the 102.70s really puts the Aussie on a downward path towards the 102, 101.50. Pretty sharp break, as this level, which was support, now has become resistance, and a break away from resistance points us to the downside in the Aussie, and that seems to be a relatively clear move to the downside. What is kind of bizarre about all of this is that we see the euro trading down, the yen trading up, which kind of does not create a excuse me, a clear pattern for the euro yen, which as you can see is being torn between two loves, right? Basically torn between the nice performance on the yen side and the weak performance on the euro side. A more clear path would have been if dollar yen and euro dollar were rallying. We could have a very clear potential here to break the 3100s. Now, if the 130 holds, and if we sort of firm up on the euro, while the yen makes the run to the 100s. I think this is actually becomes a very clear trade in a sense that the break of the 31s, which is a year-to-date high, is definitely going to give us a strong possibility of a move towards the 32s, perhaps even the 233s. But until then, it's kind of a tug of war situation as the one currency pulls it, the other one currency pulls it up, the other one currency pulls it down, depending on how we resolve the price action. And I think that's pretty much it for this week. There's some very, very clear lines, as I said. To review the lines, basically, it's the 130 in the euro. Let's go to the euro. It's the 130 in the euro as a key level of support. It's the 100 in the dollar yen as the key level of breakout, right here. And it's the 52s in the euro dollar as the level of breakdown, and generally sort of a downward cast in the pound as it's made a series of lower highs, giving us a bias to the downside. And lastly, it's the 102.70s in the Aussie dollar as a potential breakdown level as we start to peel away now from the 103.50, which was support and now has become pretty significant resistance. So that's pretty much how the week is going to shape up. I wish you guys the best of luck and the best of trading, and I'll see you next week in BK. Over and out.